The markets may not have rallied today in the way we have seen recently, but listen, that's not stopping strategists from using the dreaded B word, bubble. As the AI rally storms on, buoyed by NVIDIA reaching record highs again yesterday, it has the street questioning when we may see a pop. Our very own Josh Schafer has been looking into this, and it seems if history tells us anything, we may have a little more time, Joshua.
Yeah, Josh, I was polling some strategists on the street and simply asking that question. Are we in a stock market bubble? Are we in an AI bubble? And if so, what would it look like? And essentially, a lot of the charts they're looking at show us that history tells us, at least for now, we're not in a bubble. There's one basic chart that DataTrack first highlighted last week, and several strategists have highlighted since. You're looking at the S&P 500 3-year returns. So the 3-year return for the S&P 500 right now is about 30%. You can see in 2000, it was about over 90%. You saw a similar pop in about 2012. You also saw a pop in that meme stock rally in 2021. We're not seeing that to this point, so when you zoom out and you remember 2022 and the drawdown we had, we're not talking about a bubble exactly. Another thing that was highlighted to me from the team over at Goldman Sachs that was quite interesting is when you take a look at what stocks are participating in this rally. So you've got two lines here. You're looking at the share of US equity market cap companies. That's companies contributing to the overall market cap. You notice that's lower than 2021, and that's lower than what we saw in 2000. The other key takeaway here, and Ben Snyder over at Goldman Sachs pointed this one out to me, when you look at that light blue line, there's not a lot of companies that are highly valued. So this is looking at highly valued companies participating in this rally. There's not a lot of companies. We talk about all these companies and we point at these big stock moves every day. Look at this company up 20%, look at that company up 20%. But when you zoom out, they looked at over 3,500 stocks in that chart we just showed. Less than 20% of them are considered overvalued right now. So kind of the key takeaway there being it's not what we saw in 2021, sort of a pure euphoria rally. A final chart I want to look at here is just taking a look at debt. When we talk about margin debt and how that is impacted in the markets here, normally you would see investors trading on debt when we're in a big bubble. You can see the purple line and the blue line come close together in the dot-com bubble. They come close together in the 2021 bubble. Interesting right now, they're not that close. So in
other words, people are not borrowing to buy stocks.
They're not borrowing to buy stocks, which would be a concern, right, Julie, because then people could get over-levered and that would unwind very quickly if we were in a bubble. So those were some of the key takeaways I've found from talking to some folks.
Yeah, and Nancy Tengler, when we spoke to her earlier, she also said if you go back to the 1990s, for example, and you look at a stock like Cisco that was trading at 100 times earnings, you're not seeing those sort of eye-popping valuations right now, to your earlier point about valuations. Josh?